So this is what our expectations look like. Wide range in the corn, 14.95 average, 16 at the high, 10.95 down here at the low. Soybeans not quite as wild, and wheat pretty much par for the course. So we'll see how this plays out. This report could either be a big market mover or a market sleeper. Seeing as people aren't afraid to buy corn in here right now. I mean, we're up 11 cents, you know, 1.5%, which is about our biggest move of the week. Here, let's see. Here's our intraday chart. Let's see what this looks like. A bigger picture here. So as we can see here, corn continues to meander. As soon as it gets weak, people seem willing to step up and buy it. And we're holding moving averages pretty well. So far, we haven't seen any meaningful fund liquidation. They haven't panicked out of anything or been too nervous about stuff. So they're apparently not feeling too worried about this report. And then looking at soybeans on the same picture. Yeah, kind of the same story. This pattern right here, last 3 days, if we can finish higher today, that's actually a bullish pattern. You can see we keep bouncing off a trend line support. What we need is some good news out of China. The export sales, well, a week before Thursday, yesterday, they were okay. The week before was just 50 kinds of awful. It was not an attractive report. Some of that may be a little bit slow harvest, things of that sort. But we have not seen China in buying like we normally do. They have been buying in South America, though. So that's my newest and latest worry about the bull here. And outside markets are not being a problem today, which is a new feature. Although the corn market really, and the beans too, have really been very independent of all this other mayhem we have going on.
Hey gang, how's everybody doing?
Good.
Hey, Brooks. So, Sterling, do you think there's been anything with the hurricane? I mean, and of course it's come back in, they say, as a hurricane into South Carolina. Is that going to affect this?
In South Carolina, not so much in Florida. There may have been some problems with the orange juice, but the orange juice futures have eased up noticeably, and we'll see. The path took it right over the key orange juice areas, which are just south of Orlando. But it had dissipated quite a bit, and those trees are pretty sturdy. So,
okay,
not getting any reports of oranges all over the ground or anything like that. So,
okay. Very good. We're getting quite a few people logged on. Do want to welcome you all today. We went ahead and started the recording just a little bit early, just because, you know, Sterling starts talking quick and we do not want to miss any of his good stuff. So, and he's already got his spreadsheet up there. If you have any questions, please go ahead and put those in the chat or in the Q&A. We'll get those answered for you as soon as possible. We've got Brooks York with us as well, and Mike Toohill, because, well, as you know, there is a lot of weather going on here too. So want to make sure that we are answering your questions. There's a lot going on right now.
and I'm beginning to wonder if it's ever going to rain in Nebraska again. It's the forecast. There's one day in the next 2 weeks where we have a 10% chance of rain. And I spent most of last weekend after my lawn got aerated digging up all the dead spots and reseeding with more heat resistant grass. So hopefully what happened this year doesn't happen next year. And also, minor logistics matter. I have a sprinkler system to water the grass, and it normally kicks on in the morning, so I'm not out there looking at it. Well, I was futzing around with it and adjusting it and watering after I'd put in the seed. And one of the sprinkler heads, right, that sprays a big part of the front yard, I discovered a rock about the size of my fist blocking that sprayer. And I think that may have been a bit of a culprit to the disaster that is my front yard.
Well, goodness.
So details matter.
My yard is perfect, so
My sides are real good.
Yeah.
My back is now, after the aeration, is coming back and looking real good, but the front yard is just a complete train wreck. It went from dead brown spots to now being covered with black dirt where I dug everything up and reseeded it. So we'll see if that doesn't work. The sod people here in Omaha are going to have a new customer.
Brooks, have you started harvest yet, or is that this weekend?
Maybe this weekend. Everything's sitting on go. We had a few little breakdowns, nothing a couple $1,000 of repair and maintenance can't fix. But yeah, I think maybe tomorrow. Let's see, today is Friday, so maybe late tonight, tomorrow we get started. But things look pretty promising down here, like they do up in Mike's area.
Very good, very good. Was talking to one of our agents early this morning. He sent me some harvest pictures from Central Illinois as well. Looking really good that way. And then had a couple harvest pictures from Georgia, which are looking really good. So, send us your harvest pictures. We are going to have an update to our virtual crop tour, our harvest edition in October. It'll be the end of October. So if you have any harvest pictures, we'd love to get those from you. So please send those to us. Oh, look at all these reports Sterling's got. That new computer is good to have, isn't it?
Yes, the new computer works like a champ. It is not the old one. The old one left a little bit to be desired sometimes. So
quite a few people signed up for today, so we're still missing several, just so you know. But so I am anticipating quite a few more to get on. But go ahead and start whenever you're ready.
It's not all of this. So things are improving. There is some new stress coming out in the Ukraine. This is breaking news. This just happened literally 15 minutes ago. The Ukraine has applied for membership to NATO. And this is in light of the sanctions or the attempted annexing by Russia. So that is creating a new wave of tension. And Putin's rattling his sabers. So that is creating, obviously some new tensions for the wheat market. Also, what I'm getting for the European wheat crop is they did get some rain, which their drought is worse than the one here in Nebraska. And that has helped them with their planting, but they're having trouble getting fertilizer again. So they expect to plant the same acres, but, there are going to be missing spots, foregoing issues, with fertilizer. So again, we may see a repeat next year of what we saw this year, where lack of fertilizer, leads to uneven crops, and we'll see if the weather improves. In Argentina, I'm getting a mixed report. One government report said the weather's going to be great and they're going to produce the greatest crops ever, which is normal. 2 days later, and my meteorologist confirmed this, that the weather is not so great in Argentina and it will not be the greatest crop ever. So I've been doing this a long time, and dry in Argentina is kind of like a standard thing that you put in every report because it always seems like it's dry in Argentina. So, we're going to be looking at South American weather really once we get past that October WASDE.
Christy, we're gonna have some dialogue internally, but it's probably worth mentioning. One of the biggest impacts we're seeing on the cash market right now is the river system, and I know that doesn't. It's not what we're here for today. We're here to talk about stocks, but it is something worth mentioning, and something unprecedented is occurring right now in the cost of transportation. So if you live even remotely close to an export market or the river market, and even if you don't, you're going to see a domino effect. But barge freight trades as a commodity. I know we've done some instructional things on that internally, but barge freight trades as a commodity in percentage based on tariff rate. And I won't get into that too much, but to kind of give you an idea, these tariff rates, they cover sections of river, and they're a set amount. So at 100%, your tariff rate is a set amount. And to kind of give you an idea, an illustration here where I'm at on the Ohio River, it's $3.99 a metric ton. That would be the tariff rate. So in theory, if it's at 100%, it costs $3.99 per 2,205 pounds. That's what a metric. If you're buying in the current market, it's almost $2 per bushel in transportation costs from the mid Ohio to the Gulf. So I know a lot of times we look at these basis levels in the fall and we say, well, the market is taking advantage of a big harvest. In this case, these transportation costs are big, and ethanol plants had still been pretty aggressive, but they're recognizing the fact they don't have to be at option. They don't have to be at 10 over when the rest of the world has gone to 70 and 80 under on the river. So that's where we talk about that domino effect. Even though you're not maybe loading barges with your corn or your soybeans, that economic effect trickles down, and it's going to trickle for a long way from that geographic presence on the river. So just something to keep in mind. And normally you think, well, this too will pass, but this looks like this could have a long tail, and it's a fairly serious situation. The Army Corps of Engineers, to kind of give you an example, has gone to a 9-foot draft on the Mississippi. And normally we run, a 14, 15-foot draft out there. So you just can't load these barges very heavy. And we haven't made very many barges since the steel tariffs were put on a few years back. So manufacturing in the barge market is considerably lower than what it has been historically on an annual pace.
So what do you think the board implication is for that, Brooks?
You got to be careful here. There's so many factors, but the board implication, a lot of times basis and the board work complementary with each other, and the demand is still very, very much there. And so if you are an end user and you're hungry for corn and soybeans, you would assume that they would be buyers on the board. So we'll see what happens here. It may very well be that something that's fundamental to supply and demand that really affects it more so than a report or what's on paper may actually trump things today. We'll see. I don't know, but I think if you are someone who consumes soybeans or corn out of the United States, having ownership in any manner that you can would be very important.
I would tend to agree. And again, we're going to go back to supply chain and logistics issues. And I know certainly for the corn here in Nebraska, we're going to have some quality issues as well. So
the downside to this is if you can't physically get commodities to where it needs to be when it needs to be consumed, you naturally hit your long-term demand, especially when it comes to beef and pork. So long-term, this is certainly not a good thing. It's going to be, this is a pretty dramatic week in agriculture with some of the things going on. We mentioned the hurricane, the barge freight, the rivers being low. off-color soybeans in part of the country. There's a lot of things going on this week.
Yes, it's been an interesting week, and if we're looking at the charts, though, prices have remained, compared to everything else that's going on, remarkably civilized.
Yes,
But
it's a great way to call this market. Not flat, civilized. I like it.
well, and here's the thing: we know that quiet markets tend to get loud, and we haven't had anything that really has driven board prices hard yet. So there may be something maybe lurking in today's report that could push things. And here, the expectations, we've got a huge range for corn, soybeans about par for the course, and wheat again about par for the course. So a lot of different ideas about where we are with the corn stocks. So
Going to really kind of study up on our ability to change water levels. Obviously, you've got to have water, but Corps of Engineers with the lock and dam situation can manipulate that in stretches of the water. But I think the critical area is going to be the southern half of the Mississippi, where it takes the longest to manipulate those levels, and you don't have the amount of fall that you do in other places. So I don't want to red alert anybody, but I'm afraid this isn't a quick fix. I'm afraid this is something that we're going to have to let Mother Nature help us out a little bit on, and we can only do so much from an operational standpoint.
yeah, comes down to the fact that we need rain.
And we in the insurance world, we're well aware of this and we hate it, but we're our guarantees out there. We don't look at basis. We're coming out with some pretty good tools here by the beginning of December that's going to take cash into consideration when it comes to cash flows and break evens and things like that I'm pretty excited about. But the simple fact is, if you've got $7 corn on the board and your basis is 90 under, it's just not a great combination.
Yeah. So we'll also get some wheat numbers here, and see, again, probably not going to see any surprises for the wheat. I think the market is well, and our soybean meal exports have actually been very good.
We've got all the factors to make things positive on here, and this is a report. It's a little bit like March. It seems like it's either a lion or a lamb. Last year it was a lion, and this is a tough report. You may have mentioned this earlier, Sterling, but this is a very challenging report to accurately measure stocks because you're right in the middle of harvest. So many factors in there, and so it's turned into a market mover. It's turned into something like a March 31st, June 30th acreage report, but we all kind of know how in the world do you accurately measure stocks at this time of the year. This one's like throwing a dart. It's going to be to forecast.
And we know as soon as this report hits, it's going to be wrong because there's going to be more corn next week. We know that.
Yeah.
And but again, we have a market. We've had news and a lot of color, but we haven't had a lot of movement. So any surprise, if this number comes out, 14.95 is the average. If we come out, a little bit, anything under that, this corn's probably going to scream higher. The dollar right now, or at the moment, is flying all over the place, but it is a smidge lower. And we're seeing the bonds are at least calm now after the Bank of England's little maneuver. So we'll see how long that lasts. But
Christy, I want you to remind me, back a few months ago, we kind of started this Ukraine situation off with a special report before anybody else broadcast. I want to go back to that in a few minutes after we get these numbers, because some things we talked about then are applicable today. So we'll sit back and watch these numbers come through.
yeah, we got about a minute and a half to go until they come out. So,
Yep.
you know, the market is, no one's pulling the chicken switch here. I mean, if you came in long and you got 10 free cents, you know, no one seems to be too interested in backing off right now. So
Mm.
that's a little bit surprising. We've been so quiet leading up to it. You know, I think a lot of portfolio managers and things were a little bit concerned about other items. And
While we're waiting here, if anybody's got any harvest pictures you can forward to the group, we would appreciate it. Christy, where would you send those?
I'm going to put that email in here right now at that marketing info at sompointernational.com. I'm going to go ahead and put that in the chat right now. Like I said earlier, we have already gotten several in and they look really good. As a matter of fact, Dylan Reitz is on here and he sent us some from Central Illinois. We got some from Georgia, from Jerry Story. Well, I got some via text and they look really good too. Just some neat images already today. Really appreciating those.
yeah, I could probably go drive north and west to here a little bit and get you some really ugly ones if you want.
Oh, sad, isn't it?
They grow some corn over by Boys Town, and it's 11 o'clock here.
You go.
Where's our numbers?
Just right. Goodness.
My, we are slow today. Market right now still up 8.5, 9 cents. I'm wondering if the USDA is not having an issue here with the report. This has happened with the quarterly stocks report before, where we have not seen the report come out or there's been an issue with getting it delivered. Right
They're
now,
serving
corn,
Florida.
well, what happens is the USDA dumps this on their website, and that in turn it has to be scraped, and sometimes there can be a
There it goes.
there we go. So 1377, a little bit tight versus the survey average. 274, pretty much in line with the corn or with the soybeans, and wheat was right as expected. Corn is now here. Let's go ahead and jump right here to corn. Corn is now up 25.25. Soybeans not really getting much pep right now. They are down 2 or 3, so no one's really latching onto that. But if we see the corn number continue to hold, I would have to think that's going to spill over into the beans eventually here. And wheat liking it. Taking a look here in Chicago, 927, we're up 31.75. So apparently there are some items within the wheat here that the market likes. Let's see what the let's see what's our is there. Got anything particularly tight here? Winter. Other spring a little tight. So a little bit of tightness there in some parts of the wheat market, but everyone seems to be willing to buy that. And the corn is faring noticeably better here. So, in lieu of that, and the fact that the corn's bullish, put on the corn head.
Looks good.
So yeah, we can call this bullish corn. Beans are not digging it as much, at least just yet. They're still struggling a bit, and well, reasonably bullish for the wheat. So let's see, so number 1377. So yeah, we were 110 below the survey average, and so, but again, as Brooks said, this is throwing a dart, and we know that number is probably going up and it'll be higher by lunchtime. So that's kind of where we are, but this will have, obviously some implications for the WASD carryout numbers and things. So it is a balance sheet tightener. far as everything else going today, crude oil's been trading on either side of 80. We did have some early strength. Gasoline a little bit lower. We're seeing a lot of weakness in the gasoline market. Consumption demand numbers are they're not, well, I wouldn't say they're falling off a cliff, but they have dropped noticeably. So there's some signs, definitely we're seeing some economic slowdown going on.
Those are good points. And Sterling, we talk about, how these stocks factor into some of the fundamental things that are going on in the world. And the gasoline demand, is significant. And we have to watch that now with ethanol's role in that. Even just small amounts, it's going to be chipping away at things. The situation in Ukraine is really, really interesting because despite the rhetoric, there's actually an export pace going on out of Ukraine right now to the tune of about 90 to 98 million bushels of corn leaving the country monthly right now. That's train and vessel. We don't know whether that pace is going to continue. About 60 to 70% of those bushels could potentially displace exports. And about the maximum pace that they can, or the amount of time they can do this is about 2.5 more months. So corn supplies are way lower than what they were historically, but nonetheless, most of the corn in Ukraine leaves the country. It's exported. It's a little different than the U.S. where we consume most of our corn. So it's going to be real interesting to see what happens. But going back months ago when we talked about this, we threw some maps up of Ukraine and we talked about how the eastern portion of the country really identifies as ethnic Russians. So I don't know if you remember this. We maybe even doubted whether there was going to be a shooting war. We were wrong, right? We know that. But the premise was we felt as though some of eastern Ukraine would probably end up in Russian hands, whether that was through force or whether that was through a vote. I don't know what a vote is in eastern Ukraine.
What you want to call that, but
yeah, we felt as though that could happen, and it certainly looks like it could if that causes, temporary stability. It does not bode well for U.S. exports long term. So we've got that component. We've got just the maybe a natural slowdown from this export thing going on with the river system. It shouldn't be a big event. And then you've got things like we talked about with gasoline demand. So we are starting, in my opinion, to fundamentally see price and some other factors affect demand. And it may be small, but this is the first time in this run, in my opinion, in 30 months of this price run, that we were probably going to feel the effects of price logistics getting in the way of some of our demand.
yeah, I would tend to agree. The gasoline situation, I noticed gas here went up 22 cents a gallon week over week at the Costco here, which is a little bit surprising. And again, we're getting out of that driving season. We could see, lose a little bit of that ethanol demand. And if we combine that, we have an inability to ship the grain, if you can't buy it, you're not going to buy it from us. You will try to buy it elsewhere. And that could end up being, that right now it's good and it's driving basis up. But if it becomes ongoing, I could see that having a different sort of effect.
Yeah.
And then we have to throw over, what's going to happen with the dollar? Where are we going to go with this? We hit a new multi-decade high earlier this week, and we saw the first bits of something cracking from this historical rise in interest rates. This is the fastest interest rates have ever risen. And when things like that happen, things get broken within the financial system. And we saw the Bank of England step in because they had pension funds having margin problems. And that, basically correlated with the high in the interest rates, the 10-year right at 4%. Now we get past this, are these rates going to start pushing back up and push the dollar higher, which, as we know, will throw a sandbag on exports.
Really, interest rates I've taken for granted for a long time that, people make changes when they have to, not when they need to. And I'm afraid we're getting ready to see that with these interest rates, Sterling. I checked out kind of rates this morning, and it's pretty amazing from an ag standpoint. A lot of banks aren't offering that 30-year fix. There are a few that are pretty well known, but that rate looks like to me it's in the mid sevens right now. And
Yeah, if you
there's
want a mortgage,
fluctuations.
it's 7 and change.
Yeah. So, what a change when you look at, and this is where farmers, this is what they really struggle with. A balance sheet can look great. The ability for loan repayment and cash flow is where we struggle. And whenever you take that interest rate higher, especially on real estate, which can be some pretty stimmy payments over the course of a year, it's a game changer. And I think I calculated up, I can't remember what it was specifically, so I don't want to say it, but it was like a $2 million loan over 30 years. Just the difference in 8 months is about $365,000 out of your pocket over that time period. So it's the repayment that is really, really challenging for a lot of farms because we don't deal with cash reserves. Any cash reserves that we might have are generally spent at the end of the year on equipment and or expenses that can be deducted. So that's the challenge in this whole thing. So
Mm.
I don't think, we talked about interest rates a lot, but I don't think we can, I don't think we can talk about them enough here over the next 6 months.
Well, here's a chart of 30-year, average 30-year mortgage for a house. So you can use this as a best known benchmark. And you can see we started the year right. Let me see where I can find my pointer.
We're not
Right
seeing it yet,
down.
Sterling.
What's that?
We're not
Oh.
seeing it yet.
Oh, there you go.
There you go.
That'll give you a whoopee cushion.
Quite the chart, isn't it?
Yeah, isn't that quite the picture? But we started down here,
Hmm.
just right around 3%. We've more than doubled.
Hmm. Hmm.
And that is an unabated rise. And when we compare that back to, we're going to look, these are benchmarked off of the 10-year note. That's why we throw these in here and we talk about these because, again, it's not just looking at crop prices. We need to look at everything within your business. And you can see here, this is a 10-year, this is a daily chart. You can see we spiked right about 4, but I'm going to change this over to a weekly chart going back 10 years. Same story. Now, is this going to be the terminal high? We had inflation numbers, several of them this week. All of them were hotter than normal. And every one of them is something that's going to empower the Fed to want to push rates higher. And there's a crowd called the bond vigilantes. These are people who are willing to come in and short bonds against futures to drive interest rates up, saying to the issuer of the bond, your credit's no good. And with these inflation numbers, we're seeing things that can empower them. And that was one of the issues in the Bank of England. Their debt market is nothing compared to ours. Ours is enormous. We have enormous debt in this country. And it was very easy for those rates to get pushed around. So they had to come in and intervene, which is, we've seen 2 central bank interventions in the last 2 weeks. We haven't seen any of those really since the 2008, 2009 period. So again, we're getting to that point to where we can break something in the financial system. And then we'll start hearing that word contagion, where it could spread. And that could be something where right now everyone's happy buying their risk in the corn, and we had our nice little pot, but see, we're right back to unchanged. So that buying wasn't that aggressive. So, we could have a situation where we could see a problem where a big hedge fund's forced to liquidate, and that dominoes through the system. So again, if you're looking at putting on hedges, again, it's not going to be hard to explain to anybody why you hedged your corn just south of $7. Historically, these are still great prices.
Sterling, if you don't care, pull that interest rate chart back up, and I just want to spend just a couple of minutes while still got good attention from everybody right now, but let's talk about interest rates and how it affects the lives of our farmers. Probably the most felt impact maybe on an operating line. And so, a farmer doesn't carry a static amount on an operating line through the year. It gradually grows as they borrow money from it. But just on $1 million line of credit, if that was static, you're looking at maybe another $40,000 out of pocket over the course of that year. So it would be essentially adding an equipment payment to your budget. The second place that we look at it is equipment. And equipment, we've enjoyed a string here. Mike, if you're up in Central Illinois and you wanted to invest in John Deere equipment and you put it in the garage 3 years ago, you're going to sell it for more than what it's worth. This may have a little impact on equipment prices and some depreciation starting to occur there. And then lastly, and I think the effect is minimal for most farmers, except for the ones that have extensive land payments. It can affect land price a little bit. I look at the University of Illinois Farmland Value Index. If you get a chance, pull that up. Purdue's got something very similar, but the Farmland Value Index, you say, well, prices can come down. Yeah, they probably will, but what are they coming down from is really what you got to ask yourself. We've seen prices, I think Purdue talked about a 12-month rise of like 31% in ag real estate sales. University of Illinois from 20 to 22 indicated there was a 20.3% increase in land prices over that time period. So even if they slow down, which the indicators are there for them to slow down, it doesn't mean that long-term land is a bad investment. It simply means that we may give back some of that 30% that we saw over a 12-month period, or 50% that we saw over 3, just something to remember on these interest rates, but probably some effect.
Want to illustrate what an interest rate payment. We put in $1 million loan at 3.25%. Your payment is $43.52 and your interest is $27.08. So that was back at 325. And we're going to go with 6.80 right now. Actually, let's just call it 7. Let's call it what it is. Change that to 7. Your payment goes to $66.53. And look at that interest charge.
Wow.
$5,833.
Wow.
And to my point, you don't make adjustments when you need to. You make adjustments when you have to. And the interest rate is going to force a lot of people to the mat on this one. So guys, in a broader picture, and we don't have any agenda for these meetings. You probably guessed that if you're listening, which is kind of what makes them good. Mike, I'll put you on the spot, and none of us except for Sterling have the expertise of being kind of macro economists. But in your area, Mike, if you were picking housing, vehicles, recreational vehicles, farmland, which one of those gets hit the first with these rates? You got any idea?
Wow. I know around here the houses aren't selling, Brooks, and they were selling in like one day, and now they're sitting in the market for weeks. So it looks like housing here locally.
I saw something on Facebook I hadn't seen in a long time, and it was for a local realtor, and it said price reduced. And that's something I hadn't seen for 36 months. Yeah.
Houses here in my neighborhood are still moving quickly, meaning they're on the market a couple of weeks. But my house that I paid $309 for in June of 2020 peaked at $420. It came in at $399 the last time I looked. More interesting, as Mike knows and Brooks probably knows, I've been looking to buy a sports car and looking for something kind of upmarket. I've noticed about a 10 to 12% drop in the price of the value of, let's say, a 2014 SL 500 Mercedes-Benz, which that tells me the top of the market is getting hurt. And car interest rates have gone just bananas. And here, let's see here. It's that place, CarMax. These guys issued their earnings a couple of days ago. And you think that interest rate chart looks bad? Take a look at this. Splat. That's CarMax. And again, they're having margin problems because cars aren't moving, because we've hit a breaking point to where average car payment is moving close to $600 to $700, which is just bonkers. And so now we're seeing that cars aren't selling.
You know, Sterling, you look at this and there's critics from both sides of the aisle, but I'm shocked, but I'm also satisfied that, handed the cards that have been handed out, I was surprised that we had the intestinal fortitude to raise rates in the manner in which we have. I mean, we saw this back in the early 80s. I didn't think that to much more of an extreme level, but I didn't know if we would have, if you think back to the late 90s, remember the Asian flu where we set at 0% prime in Japan for a long time. And finally, after, I'm talking like 24 months, after 24 months, we're like, this isn't working. We're not able to stimulate the economy. I'm really shocked at the rate at which we've raised rates. And I think actually it was something that they had to do. I mean,
they had to do, and I'm picking up also a lot of criticism of the Fed that they pumped in too much money too quickly from both the previous administration and the current administration. This, along with a lot of fiscal policy looseness, pumping a lot of money in. And now, the Fed has to reel that all back in, and they're reeling it back in where we don't have necessarily an unemployment problem, but we have a productivity and economic problem that, again, the Fed's going to do this until they break things. If you think back, the last time we had rate hikes this big, you have to go back to 1992, and they bankrupted Orange County, California, because they moved rates 100 points in one meeting, and that sent a bunch of derivatives flying all over the board, and you had a county that didn't understand how the derivatives worked. We go back to the great financial crisis. Greenspan raised rates 25 basis points, but he did it, I think, 21 times in a row or something like that. And we saw how that worked. So one big nervousness about here is not so much how high they've gotten, how quickly they moved. And there's, again, on the fringes, you hear this talk that has the Fed lost control of interest rates. And if we look, at like things like the 2-year note, particularly earlier this week, we look at the 2-year and what this has done, and all these yield curves are inverted, meaning short-term money is paying you more than long-term money. This is a 2-year, and you can see, here, let me get you a better picture just how silly things got earlier in the week, where things just really spiked up over almost 4.4%. So this
interesting. Sterling, I've had a couple of questions come through. Christy has sent me one, and I've had one independently here. And I'm gonna give you my answer, and then unfortunately I'm gonna have to hop off in preparation for 11:30. Sterling, I want them to hear your take too. So I've got one, and I get tickled. It's straight talk. What do you think of the markets? The one Christy sent was, if we're bullish beans, what's the level that they can't go below? And that's a trick question, but I'm going to give you my take on the market with this huge disclaimer. Never let any of my thoughts stand in the way of being profitable, or anybody's thoughts on here. You want to be profitable, and these levels in some cases make you profitable, and absolutely take advantage of them. But I'm going to give you my market opinion. It's not based on gut, it's based on history. I believe that we've got a solid foundation for the coming months. Maybe that's 6 to 12 months. But as I mentioned earlier, and I'll address beans here specifically, as I mentioned earlier, it looks like we are starting to take demand out little by little. And if you also think about some weird things that have contributed to lack of supply, we've had 2 years in South America that haven't been stellar in regards to yields. We had a derecho that came across Iowa that took several 100 million bushels of corn away. We've had a global conflict in Ukraine that essentially shut down one of the world's largest suppliers of corn and small grains. So we have to step back and look at this. And I think that in 6 to 12 months, some things could start to decline in regards to demand and overall price. The challenge here is everybody on here works with farmers, and we are making decisions on how to spend some excess cash at the end of this year. Nobody likes to pay taxes. We're going to either do one of two things. We're going to buy fertilizer, we're going to prepay seed, we'll look at those expenses, and we're going to buy equipment. I think we've got to be really judicious with how we do this. And specifically, if you are going out and you're buying P&K, I think you have to, Mike, and you may have a follow-up on this. If you spend 12% of your budget in dry fertilizer in the fall, I think you really have to look long and hard about making that 12% hedge for next year on the board. But I think we've got a window of things staying fairly strong. But historically, it's really tough to have prolific years in the commodity world more than 4 years in a row. And Sterling and Mike and Christy know what I'm talking about there. Whenever I quote some data that's available, but that's the challenge. With that, Christy, Sterling, and Mike, I've got to hop off. You guys continue on. Awesome participation from the group and kind of interesting market. I wish those soybeans were in the green though before I hopped off.
Yeah. Just a real quick overview. We have trend line support here in the soybeans. We can see we're breaking this. The other thing, you see this little pattern here, looks like a football goalpost. That's a reversal pattern. And if we were to trade and close higher today, it's bullish and it is a very reliable pattern. If we trade below it, it's a failure and things can get kind of messy. $13 right now looks like, where we're going to see the floor. I think right now with this report, we're seeing maybe some spreading going on with people buying corn, selling beans. And the thing about the beans, we have any sort of harvest blip or anything, those supplies are tight and they can reverse. So right now, if you're out at the riverboat, right now, if the beans a little bit cheaper, do you maybe buy a little call action out in January on the hope that we see China come back into the market and they start buying in a meaningful way? Thus far, they've been very, very quiet. If they come back into the market, that'll be supportive. If they continue on their lockdowns and things, we could definitely have a test of $13. One other thing, this is kind of a flag here, which when flags and wedges descend, they're bullish. So maybe there's a chance of a reversal. But right now we're getting people getting plenty nervous about the bean market right here on a report that was not, frighteningly bearish, really. Is it the number here for the soybeans here? Let me grab the number. We were looking for 243, and the number on the beans, it was 274. So it was, at the upper end of the range. But again, we're not talking about that many beans, on the scale of life. So those are my thoughts on the soybeans right at the moment and where we finished today. These markets are incredibly choppy. And if we were to finish higher today, somehow unchanged or in the upper third of the day's range, that goes from being right now to a kind of a stinky picture to a screamingly bullish one in a hurry. But we're going to need to see, 40 cents, 45 cents worth of buying to come in to reverse that. Christy, we had some other questions?
Those are the only questions I've had so far.
Mhm.
So, yeah.
And one other little thing here, the big markets, the outside ones are getting a little nutty again. And the dollar index was lower earlier. It's now turned positive on the day. And the 30-year interest rate is now flat where it was negative, and these things are creeping up in the stock market. We were sitting up 145 Dow points when we started. We're now down 120. This is again the end of the quarter, and people are unwinding hedges and booking profits. Monday we start a whole brand new year, really, given the amount of volatility we've had. So things are going to be potentially different here. So again, stay tuned. If you have questions, feel free to email me. Feel free to call me. No question is a problem or anything. I'm happy to sit down and go over whatever details you'd like me to go over with.
Yeah, we do. We want to thank you for joining us today. You can send any question you would like to that marketing info at sompointernational.com. Make sure that you're getting our daily emails. Sterling has all sorts of great information for you in those. And on Wednesdays, he has his top 5 of information that you need to know. And you don't want to miss that. So we've got our weekly wrap up today, Sterling, in addition to this great information from today. Anything else we need to conclude with that we should share with the folks? Mike?
Make sure to read the Wednesday reports. Those are 5 easy points for corn, wheat, soybeans, and cotton. So you can be the smartest guy in the coffee shop or the bar, wherever you want to talk about corn. So.
Yeah, looks like a great 2 weeks for harvest weather outside of the southeast. So we'll put a lot of this corn and bean crop to bed here in the next couple of weeks.
Yeah, things are going to fly around here. It's already started early, and again, it just doesn't rain in Nebraska.
And today is fall sales closing day. So make sure if you are a producer out there that you are getting in touch with your AgriSompo North America agent. And if you are an agent, make sure you're getting with your producers. We want to make sure that you get those risk management plans squared away. So thank you again for joining us. We have recorded today's presentation, and we hope to have this ready for you in an upcoming daily market email. So thank you again. Did want to let you know, remind you that Ukraine presentation was done February 25th, I believe, is when we had that recording done. So if you want to go on our YouTube page, you can view that there. So thank you again. You guys have a great day. Happy harvest. Stay safe. And we will talk to you soon. Take care.
Thank you. Bye.
Bye.
Thanks, everybody, and have a great weekend.